When you're starting to build a trading strategy and you first open a chart, you need to put together a plan to guide you on where you may want to enter or exit a trade, and how you're going to look for informed trading decisions. I'm Chris, and I've been trading for years. Like many traders, I mainly use support and resistance to help decide when I'm going to buy and sell. I use it all the time. Learning this strategy is easier than you might think. Support and resistance are areas in the market that previously price has struggled to either break above or below. So if we break it down into segments, a support is a floor in the market where price struggles to break below. So if we've got a floor here and price is trading, this floor is preventing price from moving lower. So what you might see on the chart is price hits this floor, so this support level, and then it starts to rally higher. On the contrary, a resistance is a barrier that stops price from moving higher. So as the price starts to move up, this level here will stop price from going any higher, and you could look to place potential trades. The easiest way to understand support and resistance is to think of them as ceilings and floors. If we use a support as an example, that is your floor, preventing the market from moving lower. So if you're standing in your house, if you look down, your floor's there. It's preventing you from moving lower. And then if you look at resistance, that's your ceiling. It's preventing me from moving up. Now, what happens if I go upstairs and then I look down? That same ceiling is now my floor. So once you break above a resistance level, once you break above that ceiling, it then becomes your floor. And on the flip side, once you break below that support, below that floor, it then becomes your resistance. Okay, it then becomes your ceiling. Now that's the theory. Let's see what it looks like on the chart. So what we're looking at here is a chart of natural gas, and it's a one-day chart. So each candle represents 1 day of trading. Now, if you look at the level there, I've drawn it, it's 5.321. And that was a previous high back in February 2022, earlier this year. Now, what happened was the market hit that resistance level. So the market came up, hit that resistance level, and it moved lower. Now, if you have a look at the chart, what you'll find is once the market actually broke above that 5.3 level, it then acted as a support. So it then became your floor. And if you look at throughout the rest of the year so far, we've actually tested it multiple times as a support, and it struggled to break back below. Okay, the market's failing to break below that level. If you're looking at the chart now, you're thinking, where's natural gas going to be headed? Well, from a technical standpoint, if you're looking at support and resistance, you're looking at that 5.3 level, and it's pretty pivotal. So the same way you can use previous highs, which are your resistance levels in the market, you can also use previous lows. These are your floors in the market. Okay, these are your support levels. So if you look at the German 40 here, so this is the DAX, and it's a one-day chart, same as the natural gas one that we had an example of before. And you can see here back in May, these are previous lows. Okay, so the market hit here and it struggled to move any lower, and market actually rallied from there. It moved up. So the market actually moved up in price. It came back to revisit this level again here, and the market moved higher. Okay, now look what happened once the market broke below that support level. Broke below, and it now becomes your resistance. So that same floor, you broke below it, it's now your ceiling. The market's struggling to break above. So a trend helps you identify which direction the market is moving in. So in an uptrend, okay, the market is generally moving upwards. It's consistently going higher. On the flip side, you've got a downtrend where the market is consistently moving lower. And using these trend lines, these diagonal support and resistance levels, you can kind of tell where the trend is, okay? And there's a saying in trading, the trend is your friend. So if you look at this example here, the market is failing to break below this trend. It's failing to break to the downside. So the example we have here is the US Tech 100, which is also known as the NASDAQ. And again, it's on a one-day chart, so each candle represents 1 day worth of trading. And this is an example of a downtrend. Okay, so if we look at the chart here, you've got your trend line resistance. The market is struggling to break above there. And whilst that's happening, the market is in fact moving lower. So the trend is firmly to the downside. And this trend line, this diagonal resistance line, this diagonal resistance level is preventing price from moving higher. And just from that information there, you can kind of tell where the market could be headed next and where your next potential trade could be. So, by identifying these support and resistance levels, you can identify where the market could go next. And this can help you when identifying where to enter the market, where to exit, and most importantly, where to put your stop loss. In the next class, we're going to dig a little deeper into how to draw lines and how in fact we really should be looking at zones instead. For more courses and guides to help you be more educated on your trading journey, head to our education hub at Capital.com.